Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host, AlgoBot, and today we're exploring an expert advisor called Vwap Slope RSI Continuation. This is a trend-following pullback strategy that combines two of the most widely watched tools in the markets, a volume-weighted average price line, known as Vwap, and the Relative Strength Index, or RSI. By the end of this video, you'll understand how the EA reads the trend, how it times its entries, and how it manages risk. Remember, this is educational content only. Let's get started. So what exactly does Vwap Slope RSI Continuation do? At its heart, this expert advisor is a trend-following system. It does not try to catch tops and bottoms, and it does not fade extreme moves. Instead, it identifies the direction the market is already leaning and looks to join that move during a temporary pause. The engine builds a rolling, volume-weighted Vwap over the last 30 bars by default, using each bar's typical price weighted by its volume. Vwap is one of the reference lines that many institutional desks watch throughout the session, so it gives us a sense of where the average traded value sits. The strategy then measures the slope of that Vwap line. It compares the Vwap calculated now against the Vwap calculated a few bars earlier, 5 bars back by default. If the line is rising and price is trading above it, the EA treats that as an uptrend. If the line is falling and price is below it, that's a downtrend. By only trading in the direction of the slope, the strategy aims to stay on the right side of the broader order flow. Once the trend direction is established, the second tool steps in. RSI is used purely for timing. Inside any healthy trend, momentum ebbs and flows. Price pulls back, RSI dips, and then momentum returns as the trend resumes. This EA does not buy raw strength. It waits for a shallow dip to exhaust itself and for RSI to turn back up before joining the move. Who is this style suited for? It's designed as an educational example for traders interested in trend continuation on intraday timeframes, such as 5-minute to 30-minute charts, on trending instruments like major currency pairs or stock indices. As always, every approach carries risk, and losses are a normal part of trading. Nothing here is a promise of any particular outcome. Let's walk through the mechanics step by step. The EA acts once per newly closed bar, so it never reacts to the noise of a half-formed candle. When a bar closes, the strategy updates its history and checks whether it has enough data and whether any position is already open. It only ever holds one position at a time per magic number, and it also checks the current spread. If the spread is wider than the maximum allowed, 80 points by default, the EA stands aside, because expensive execution can erode a continuation move. Next, the strategy computes the two Vwap values, one for the current window and one ending 5 bars earlier. From these it derives the slope. For a long setup, the Vwap must be rising. For a short setup, it must be falling. Now the RSI timing comes into play. For a long entry, 3 things must line up at once. First, the Vwap slope must be up. Second, the closing price of the signal bar must be above the Vwap line, confirming price is on the strong side of value. And third, RSI must have been at or below the pullback level on the prior bar, and then crossed back up above it on the current bar. The default level is 45. In plain terms, the dip cooled momentum, and now buyers are stepping back in. The short entry is a mirror image. The Vwap slope must be down, the closing price must be below the Vwap, and RSI must have been at or above the symmetric level of 55 on the prior bar, and then crossed back down below it. The rally faded, and sellers are resuming control. Risk management is entirely volatility scaled using ATR, the average true range. When a long opens, the stop loss is placed below the entry at a distance of 1.5 times ATR by default, and the take profit is set above the entry at 2.5 times ATR. For a short, those distances are mirrored, with the stop above and the target below. Because the target is a larger multiple than the stop, the strategy seeks a reward that is larger than the risk it takes on each trade. Once the position is open, those two levels manage the entire exit. There is no separate trailing logic. The trade runs to its stop or its target. Let's look at the actual MQL5 code that runs inside MetaTrader. At the top, you can see the input parameters. VwapPeriod sets the rolling window for the volume-weighted VWAP, defaulting to 30 bars. SlopeLookback, set to 5, controls how far back the second VWAP window ends so the slope can be measured. RsiPeriod is the RsiLookback, 14, and RsiPullbackLevel, 45, is the level the long entry crosses up through, while the short uses 100 minus that, or 55. AtrPeriod, AtrStopMult, and AtrTpMult define the volatility-based stop and target. There's also a spread filter, the lot size, and the magic number. Below the inputs are the two signal blocks. The long block reads, if slope is up, and the signal close is above Vwap now, and the prior RSI was at or below the long level, while the current RSI is above it, then the EA opens a buy. You can see it reads the ask price, sets the stop loss 1 ATR distance below, sets the take profit further above, and calls trade.buy with the lot size and those levels. The short block is the exact mirror. If the slope is down, the close is below Vwap now, and RSI cross down from at or above the short level to below it. The EA reads the bid price, places the stop above and the target below, and calls trade.sell. Both blocks end with a return, so only one position opens per signal. Notice how compact the logic is. The trend filter, the momentum timing, and the risk levels all sit in a few clear lines. Now let's bring it all together on the chart. The blue line winding through the candles is our rolling VWAP, and beneath the price you'll see the RSI panel with its two reference lines, the long level at 45 and the short level at 55. Watch the left side of the chart first. Price is stair-stepping higher, and the VWAP line is sloping gently upward beneath it. This is exactly the backdrop the strategy wants for a long, an established uptrend with price holding above a rising value line. After the first couple of candles, momentum cools and price drifts lower for a bar or two. As that pullback unfolds, notice the RSI sliding down into the lower pullback zone, dipping below the 45 level. The strategy is not interested yet. A falling oscillator alone means nothing. It is waiting for evidence that the dip is finished. Then comes the signal bar. Price snaps back upward and closes firmly above the rising VWAP, and at the same moment RSI crosses back up through 45. All three conditions are now satisfied. The slope is up, price is above value, and momentum has turned. That's where you see the buy entry marker appear. The EA opens its long at the next available price, and immediately places a protective stop a set distance below, scaled to 1.5 times the average true range, just beneath the recent pullback low. The take profit sits higher, at 2.5 times ATR. From there, follow the move. The next two candles extend the trend with strong closes, and the VWAP keeps rising underneath, confirming the continuation. Price reaches the take profit target, and the long trade closes in this illustration. Exactly the kind of measured continuation the strategy is built to study. Notice the intended reward was larger than the risk, reflecting that 2.5 to 1.5 ATR structure. Now the character of the market changes. Near the top, price stalls and then slips back below the VWAP, and the value line itself rolls over and begins to slope downward. We've shifted into a potential downtrend, and the strategy flips to looking for a short. Within this new downtrend, price stages a brief rally, pushing up toward the falling VWAP. As it does, watch the RSI climb into the upper rally zone, rising above the 55 level. Again, the EA waits. A bounce by itself is not a signal. The short signal arrives on the next bar. Price turns back down and closes below the falling VWAP, and RSI crosses back down through 55, telling us the rally has faded and sellers are resuming control. That's where the sell entry marker prints. The EA opens a short, places its stop a set ATR distance above the entry, just over the rally high, and sets the take profit the same larger multiple below. Follow the final candles down. Each one closes lower. The VWAP keeps falling overhead, and price slides into the take profit target, closing the short in this example. Both trades followed the identical blueprint. Identify the trend with the VWAP slope. Wait for a pullback to exhaust using RSI. Enter in the direction of the trend, and let the ATR base stop and target define the exit. The chart shows an ideal case. In live markets, plenty of signals end at the stop instead, and that is a normal, expected part of any trend-following approach. Let's wrap up. Today we explored Vwap Slope RSI Continuation, an expert advisor that uses the slope of a rolling, volume-weighted VwAP to define the trend and RSI to time shallow pullbacks, entering in the direction of the move with stops and targets scaled to volatility. We walked through its entry and exit logic, read the core MQL5 code, and traced both a long and a short example on the chart. Remember, everything in this video is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. Always test any strategy thoroughly on your own and consider your own circumstances before making any decision. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MT5 strategy walkthroughs. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.